Hey guys, how's it going? Just thought I'd do a little bit of a BTC update for all of you following today's trade, and also just giving you a quick little top-down analysis video as well, just to re-go over everything and make sure everyone is moving in synchronization with myself, and also just to, whether to correlate with your own charts or whether you are looking for just a little bit of a different pointer here and there. The main purpose of this video is to simply update you all on what I'm still looking at and what, if anything, has potentially changed within the market. So the first thing we want to point out is from the monthly time frame perspective, you want to be looking at what's currently going on with the charts right now. So besides the levels that have just been marked here, I'll leave them there for the time being. We first want to focus on where we currently are in this point of time, and looking at the monthly time frame, which obviously are some of the strongest candles you can look at, besides going much longer to 12 months. So when you pay special attention to this region here, you can see where all of these wicks have formed above up here around the $13,000 region. We're still way below that level, so we have not actually managed to break above these wicks just yet. However, from a monthly candle perspective, looking at the candle bodies, we have in fact broken above, come back down and retested precisely at this region here. So we're at a bit of a cross point because we have a 3-pin pattern over here as well, which has rejected a prior level that has come into play several times, not necessarily very strong, which is why I do believe there could be some more downside to come. However, when you do look at how it's rejected quite nicely, it does insinuate there could be a little potential push higher, which is what I was talking about regarding the $12,000 plus move. So before we get to the potential $12,000 move push higher, we first want to focus on the overall medium to long-term target. Overall, I expect from this kind of perspective, from a longer term perspective, BTC to not only fulfill the gap at around $9,600 here, over on the CME futures chart at around 9620, however you want to look at it. So let's just mark this level off. Let's say 96, just approximately. We'll mark off 96. We will also make the line red just to show you it's a danger zone of a gap. So when we go back to the CME futures chart as well, there is obviously a gap over here. If I go to the daily, at around 11,235. So we have two gaps in play. Now, in the prior market breakdown and in the trade innovation, when I gave you the trade setup, I did state it was a bit of a high risk trade, and we'll get to that trade setup in a minute as well, because it did take into consideration the potential CME gap fill that would have come through. So going back to the monthly, we're obviously looking at what could potentially be an overall movement that first of all needs to fulfill the gap over here on the CME futures 96, but also we need to take into consideration much larger levels down below. And I personally believe once we start seeing this level come through, BTC will potentially drop back down to 8,000 and all the way back down to the $7,000 handle. And from this point onwards, just dragging the CME futures tool back and grabbing this instead, I believe, if I can manage to grab it, that is. Nope, let's just drag this first and then move this back. So let's just set that there for now, it doesn't matter too much. So I'm overall expecting BTC to do this, drop all the way down, fulfill this region one more time from $8,000 to $7,000, and from then onwards start tackling the $15,000 region, and then pushing up to, of course, $16,000 to $16,500 before we really start seeing what could be the next potential moves lower. Now, when I say those moves lower, if we first of all fix this as well and then drag this down, we could be looking at anywhere from here to potentially here. Now, I know this is a very large projection in time, but actually even just drawing those arrows now, you can see there is a nice uptrend forming even from that potential projection alone. So if you look at that there, it's starting to form a nice channel. So we can see in the overall grand scheme of things, we're pushing higher, lower, and then we're just progressively and gradually breaking higher. So what can look incredibly complex, on the daily time frame, if you were to go like that, even though we're trending upwards, we're also technically trending downwards, as we have formed a higher high but a lower high over here with the head and shoulders. So in the daily time frame, it can get very complicated, but when you go to the monthly, you can see progressively over time this thing is just curving. There is that nice curvature pushing us upwards over the grand scheme of things. So if we go back to this, before we see this potential pullback from here, and also if you just want to see why this may potentially come through as well, we can first and foremost get a long-term Fibonacci tool up. Now this doesn't mean we are getting the Fibonacci targets down to $1,000 or obviously minus. However, a key Fibonacci retracement on the monthly is something very important to look out for. However, I'm not really expecting this to do something as stupid as come back down to $1,000 anytime soon, because progressively we are making higher lows as well. As you can see, from there to there to there, everything is progressing upwards. So we've got a sloping 3-wick descending formation over here as well. I don't know if that's actually a real formation, but it works very well in crypto in particular. So noticing that we're at the 78.6 fib, correlating pretty approximately with our current key level of around 11,600 or so, and also around 11,750 on the 78.6 fib. So what we could really do in this situation is just get this tool and drag this a little bit higher to $12,000, and we'll just make that white, not to confuse it with any downside targets and whatnot. And also we will reduce this ever so slightly as well, just so we can see what's actually going on. So we've got a CME futures gap. The overall projection long term is long, and I'm going to keep saying this again and again and again until people understand what I'm trying to get across. However, before we simply progress higher, there are bounces, there are up and down, and there are bullish and bearish phases. It's looking like right now, alongside, if you just look at where the tool is as well for the CME futures gap, can you see, if I was to draw a zone right here, it's another crucial level of support where we've had resistance, support, resistance, support, resistance over there, resistance again, resistance, bang. So now it's almost inevitable there will be a push back down to obviously fulfill this region. However, we could see that just push a little bit further, whether that's in a single wick like this and the monthly closes over there. That's something we'll get to at a much later date. But I feel like by explaining all of this first, doing the full top-down analysis, you can understand the overall bigger picture. This is the most important part of everything. So hopefully we can start anticipating pullbacks down to this region, and then from there figuring out opportunities along the way. But this also goes into my strategy. This is something I've always told you guys. When I'm giving you, for example, a long trade like I did today, it doesn't mean I expect it to blow to $20,000. I'm going down to the 4 hour and the 1 hour, despite knowing that the overall downside movement is potentially going to go all the way down to these regions over here and fill the CME gap at $9,600. I'm giving you the movements from the daily, the weekly and below, showing you what I think may potentially just come through before the overall bigger move comes round. So again, do not get confused if I'm long or short many times in between these overall long-term journeys. Now, if we go to the weekly, we can see now very nicely as well what I covered in prior breakdowns. I wanted these regions to come through and get retested, and obviously we did see that. We saw that on many of the pairs like XRP as well and Ether. So what we want to be seeing right now, if we just plot the Fibonacci tool once more, we can see we are currently holding on the weekly. I'm just going to get rid of all of this just to keep things really clean and simple, and get rid of these arrows as well. You know, the overall move is upwards now. So from the weekly perspective, we've got the fib over here from high to low. You can see a very nice 61.8% retracement. We've got correlations with $11,600, and we've got the 78.6 fib just above. And look at where that is. It's just below that $12,000 region. So judging from where this currently is located, and judging from the fact we could be seeing a lot of wick fishing, I do believe we're going to, at the bare minimum, at least see that push to around $12,100 to $12,200. That has still not changed. Basically, in simple terms, I'm accommodating for the 78.6 fib, the $12,000 region just above, which is obviously a key level. It's where we reversed from prior, but also just adding a little bit of space above where the prior wicks were, as this market is manipulative. So we're simply just looking at this $12,000 region to around 12,200 or so. So just take that into consideration, and then look at where that leads us. Of course, again, this is still the long-term / medium-term outlook, because we are still pushing lower down towards the CME futures target and still potentially at the $7,000 region. Do you see what I see at this $7,000 region? We have a shoulder, we have a head, and we could potentially have another shoulder forming at this level as well. So we could very easily start seeing this region come through, price push back up, then drop back lower. Remember, every movement is always an up or down. It's never going to be an immediate boom. Even these immediate booms on the weekly time frame do become trends like this on the daily. So you always need to put that into perspective as well. It's very, very important. So right now we're looking at this region here, and I still do believe we are going to see that upside push. However, we just want to be cautious right now. I was saying potentially if we fall, this is many situations, these happen all the time in crypto. You can either wait to enter a short around this region over here, accommodating for the wick fishing regions, or if we do not go straight to that target, this could obviously extend higher, which means we then wait for it to potentially pull back first to the next real regions of interest where we can then potentially go long again. So looking at this here, to explain this as simply as possible once again, we are at the weekly Fibonacci setup, which means we're also at a crucial level of resistance. So we've broken through that resistance after maintaining support. Well, it technically was a bit of both actually, but we broke through, we maintained as resistance, and then we've broken all the way back down again, which shows a significant amount of selling pressure at this region. So when you've come back up, this prior support now turned resistance is being tested, but we have a huge weekly Fibonacci to accommodate this. So we know overall around this region there is a very big probability we are going to go lower to fulfill the next Fibonacci targets. However, conveniently, the CME futures line and region and gap that needs to be filled is all en route to this target anyway. So many people would probably just look to go long straight at the CME futures gap, but obviously you would be waiting to see if these levels come through. A simple bit of trend line play over here as well, no matter how you draw this, just shows from the long term. Just fix that up a little bit. You can see we've broken through, bang, we can now come back and potentially retest this trend line over here, also forming a head and shoulders, and then really start booming to the upside. If I set this over here and it ends up becoming, from a weekly perspective, from low to high, a pinpoint 61.8% retracement. So this may not necessarily come through, and if this does come through, very unlikely, but that would just be a very huge wick for, again, from a longer term perspective. So we're looking at potential shorts coming down to at least this 68.6% retracement. Trend line over here, perfect correlation. We should be coming through and hitting this region at some point, whether that's at the end of the year around December, or even if this starts pushing into the early Q1 phase of 2021. Again, longer term targets, keeping you in synchronization with what the market's looking like right now. Again, this can all become invalidated immediately if we really start seeing weekly candle closures above these regions over here. But if you see a wick go up to $50,000 but it ends up closing back around this region, it still means it's bearish. Do not be fooled by those wicks. Wicks play tricks. So going down, we can now see this. So I think what we can start doing from this point onwards now is go into the daily time frame and just getting rid of these fib targets for now. It's nothing important. Getting rid of this trend line and getting rid of this trend line. Let's keep this nice and simple. The first thing we see, before we see this potential wick fishing push, and before we really start potentially just melting to the downside, there could still be another upside movement in play up to this region. So what I was trying to get to earlier is, in fact, I will mark it out from this region here and change the color. Not sure why my Steam keeps popping up. Sorry about that, guys. Someone obviously wants to play CSGO. So let's just link that over there. We can now see we're in a very complicated position because we've got prior support over here and we've got prior support over here. So we've come back and we've now retested that level as resistance. Candles, beautiful, absolutely beautiful. It's now just a matter of time. I know I didn't really take into consideration the CME futures gap over here at 11,200. However, I did say it was worth the risk, because if it was going to go down here anyway, there was no point putting a stop loss here. I just put it literally there, around $11,291. I'll get the RR tool up in a second, and then from there we can see what's going on. But I do still believe this upside bias is going to come through. And if I just show you a little bit about the trend lines and stuff I was covering, the trade pretty much came through precisely as I stated. Now, this is, of course, the 4 hour. So what we're looking at here is a potential break above, a retest, and a boom. All we would do in this situation is get a little Fibonacci tool up as well. And Lord and behold, you've got the perfect 78.6 fib, and you've now got the potential burst up to 11,900 and 12,000 plus. So if if we drag this back down to 11,200 for now, we can see we could potentially be fulfilling one final Fibonacci movement to the upside. From there onwards, we start looking at dumping all the way back through the $10,000 support. When you go back to the daily time frame, it doesn't look as large and it doesn't look as frightening. And guess why that is? Going back to the daily, there's a now even bigger one coming into play over here on the daily. So you just mark that out over there. Guess what? It correlates perfectly with what I showed you earlier. If we do see this roll around towards November, December, drag this line a little bit further, and what you'll see is the crossover point does start to mold around the December period. So that's just another trend line we should be potentially falling to once we start melting to the downside, because we're in an overall movement here. We've pushed down, we've started climbing higher, and this could fulfill the wick fishing. And all of those people who, for example, entered on the head and shoulders here, stop losses would likely be at break even or anywhere around this region now. So there likely could be a little bit of a stop hunt in play. But even if you get rid of the trend line, as an example, crucial levels of support and resistance, we're progressing higher, higher high, technically higher high, higher high, higher low, higher low, higher low, higher low, pushing higher. So we now basically just need to figure out what is the best likelihood in the market, and that means patience. I always say to people, do not enter at any given moment. The only reason I've really even given this trade out is because those of you who have been following likely would have taken the huge, absolutely huge BTC long trade I've given out, which is obviously running very significantly in profit. So you can justify that little 1% risk as well. But I just want to throw out there as well, just going to the 4-hour time frame and getting the risk to reward tool up for the trade setup that went wrong. As you can see, we got a perfect entry on the first trendline retest that I gave out to you guys. I believe it was around there. So wick, body, several bodies and wicks, bang. So we entered very nicely around this region. However, we unfortunately just got stopped out there. If only it was a tad lower, it probably will just boom to the upside now. So I just want to watch out for this. The stop hunting came through. Maybe the stop loss was too small, but again, it's a 1% risk. Who really cares? It's not going to damage the bank. We are up way over 60-70% this year just from the calls I've been giving out since the early period of March of this year. So again, we now need to just figure out and decipher. Although this looks incredibly bullish, we have seen a little bit of a push lower. It hasn't broken this trend line yet. So overall, it could be working quite nicely on this 1-hour perspective. Just because it's wiped us out, it doesn't mean the bias is wrong. It can just simply mean it was a bad entry, because when we go back to the Fibonacci setup over here, the A, B, the C, it all lines up perfectly. So technically, even I should have been a bit cautious of that, because the 61.8% is there. And obviously it retained so well, it wasn't really expecting that huge movement up. But a valuable lesson to learn is as well, did I actually just delete that tool? I think I did. Let's go back quickly to the RR tool. A valuable lesson to learn is when I did give you this trade, it bursted to around 2.8% profit. And I said this on Twitter and I said this on Instagram as well. There is no harm in taking profits if you make 1.5%, 2 to 3%. Do not be greedy. I personally chose to hold. I should have even potentially added a 2% risk onto that trade at a better price, but I thought it was best not to. So I just kept holding. I didn't really mind getting stopped out of that one. But what the point I'm trying to draw home is, the setups I'm giving you, there is nothing wrong with taking that 2.8%, and even I should have probably taken a little bit off the table. And I think moving forward, what I'll be doing is, again, I have no shame in showing losses. I'll never ever hide that stuff. Happily say this went 2.8% into profit, which is absolutely amazing for a single day's trade, and then it went into negative. I don't care. You know, most people don't even show losses, so I'm more than happy to express this and throw this out there for all to see, because I know the winners will always counteract, especially when you're only risking 1%. So just showing you a good showcase. And I tweeted as well, guys, do not hesitate to take that 2.5% profit when it was there. You could have even made 2.8. That every single day or every other day or even a few days in a week can end up being 10-20% a week. And when you put that into perspective, I treat my results as I do my long-term trading outlook from top-down analysis. I don't always look at the day, I look at the overall week, and sometimes I evaluate from the month. If I've made 20, 30, 40% in that month, or I've given out 50% worth of trades in that month, it doesn't really matter. what happens. So just take that into consideration as well. Now, going back to the 4 hour, we just want to be a bit patient now because there's two things that can happen. We have the gap at 11,200 here, which is something we want to watch out for. That's the second gap over there. But we also just want to watch out because just below that, you can see there's a lot more price action going on in this area. So you want to really be paying attention to that 11,100 prior level we broke out from to the $10,000 region. It's just something I'm a little bit cautious of if we do see that downside movement. Now, obviously, because we have got the CME futures gap over here, we do not want to just jump back into another position because then we're going to have to set a stop loss not only below this level, but potentially below that 11k handle. Now, I know it is still a decent 1-2 setup, but I do not really want to be giving you guys trades with, you know, this big of a stop loss, really. So we really want to be avoiding that kind of stuff. So all we need to do now is just sit on our hands and be patient, because we're either going to wait for it to dump to then catch the move up to $12,000 before we see the major daily dump, or we're going to wait for it to just burst straight to the upside, start chilling around this area, and then we can locate the next area of interest to enter a short position. And just how I gave you guys this short trade over here at around the $14,000 region just a few months back now, this may be the next potential move. So we need to just sit on our hands and wait to see what's going to go on. Because for all we know, maybe it just blows even higher and just triggers around the $13,500 region, and then we short from there. Because even if it goes up to here but doesn't break these wicks, it's still within our range. So if I just mark this off, if we do not see candle closures on the weekly at least above this region, we still remain in the next bearish cycle before seeing the upside movement. So it's one of those moments we just sit on our hands and wait. But again, just giving you a little bit of an insight, looking at this right now on the daily time frame, looking at how things are flowing nicely. We've come back down, perfect level of support over there at $11,300. We once broke below almost a miniature head and shoulders. 30 minutes kind of gives that away as well. Many shoulders, head, another shoulder, boom. This really could just be bursting straight to the upside. So it is a good entry opportunity, but it does obviously hold a very significant risk, because if we do see the dump down to this region first, or even potentially lower, it won't really be worth the risk. But it's up to you guys. If you want to, I'm not going to jump straight back into this one, but going from a 4-hour perspective and looking even just at around $12,000 up to around $12,100 just to be safe, I personally would be very cautious of this particular region here around $11,100 if it was to come through. But obviously this is the beauty of risking 1% as well. So if you're going to go through the effort of risking a 1% setup anyway, do not have a huge stop loss. If it breaks below here, it's obviously going to go to this level anyway, so you might as well just put your stop loss below this region, and if it goes down, it's obviously going to break anyway. So instead of just doing this just to miss out, I would much rather close out here or here with 1% loss and simply just re-enter again if it starts coming through to my entry of interest, which would obviously be 11,000 down to this region. So just an idea of a setup here to give you. If we go to the 1 hour, you can see, let's just push this a little bit more. Am I not moving that? One sec. Let's just say there approximately once it pulls back and whatnot, and we will push this down to around 11,200. I think that would be, from the grand scheme of things, from the 1 hour, no, it doesn't. It's almost too big for the setup, but it is. I would actually just say let's go in here, because there's wick activity there. So if it's going to go down, it's going to go down. But if you were to enter right now, if that even pushed you up to there, it wouldn't be too much of a problem. You have to watch out for wick fishing, but this overall could actually be a very nice 6.5% setup. I'm going to happily miss out on this one for the time being, but I'm going to wait for this. So if we do break below, we focus more on the bigger term movement, which is of course the trend line. Number one, we'll put that over there. So it will be a very sharp movement if this was to obviously happen. So if this does fake out, we'll be paying attention to this region over here where there's a cross point, potential wick fishing, and then boom, we'll be looking to ride that move up first of all before then dumping lower. So I would just practice patience for the time being. Do monitor this for a potential push higher. Let the market do what it needs to do. Now once this does one of the two things it does, we can then recalculate from there. But just to give you an insight and hopefully understand the overall bias, I hope this has massively helped with absolutely everything and given you a bit more of a construct to your trading day and also to your crypto trading day. So besides that, we're just going to sit on our hands and wait. If it does end up doing a crazy pullback just to fill the gap and then close below this region, we can also consider entering a long position as well, but it's best not to take any risks, especially if you've already taken one hit today. So guys, hope that's massively helped. Again, anything you could need a bit of a pointer on or a bit of education on, just let me know and I'll be happy to help. But hopefully this now, from here onwards, will put everyone in synchronization when I start providing some more stuff for all of you as well. So I hope you have a good evening and we'll catch up in one of the next videos.